Hey everyone, John Henry here, slingshotfutures.com, and welcome to the Market Mindset, where we take a look at the psychology behind the moves today so we can better understand tomorrow. And today we're going to be digging into crude oil. Now, the way that crude oil is set up this morning, first of all, we need to put it in context. What happened yesterday? Yesterday had a nice run higher, very strong run higher, but when the buyers had another chance to get it going, they completely fell apart. Right? They tried popping above, twin reversal right back down, never came back again. That's a pretty big clue because that ended the day as a wedge. Now, with the end of the day wedge, they started breaking out of it right at the end of the day. The final two candles of the day started breaking out of it. But we have to put ourselves in the shoes of buyers that may have missed this to kind of get a full picture. Obviously, the buyers who bought down here and bought that whole run up, they're going to be taking profit, and that's probably where that came from. But if you came in late and you look at this and you say, man, I didn't get a chance to buy any of this, so I'm going to buy the pullback. They're going to start buying these lows and buying all of the pullbacks, and they were immediately wrong. Then we open up today with a gap down in a very strong bull candle. Once again, we know that buyers are stuck, right? So we know that the buyers are stuck around here, and that gives us a reason to believe that if they're going to try to hang on to it, that before this market can make a dive lower, it's going to have to turn higher to get those buyers out of the way, or at least get the majority of their volume off the table. So you start off the day with a strong bull candle, bad follow through, double doji into a bull breakout. Now we start getting into that area, right? We know buyers probably bought at the lows. They probably bought here. They probably bought the one tick there. This is the area where they're going to start getting out. They finally, after a full day, have been able to get out at break even. And notice where all of those wicks start occurring right around that area. So that gives you a quick little reason to become a short-term seller to drive the market down at least back to fill the gap and retest it. Here's the thing though, as it starts pulling back, this is still a very strong move higher. So if you took the sell, it worked out really nice. But as it starts pulling back, now we have a brick bottom candle and all follow through. Even though they were dojis, not a single bear candle response so far. So the buyers are likely scaling into this move if it comes back. We get a push down, and buyers begin jumping in. And here's the big line in the sand, that low of the candle. And the fact that that low of the first candle of the day wasn't broken, we form a higher low and continuation with a twin reversal, once again, off of that gap level. The sellers push underneath it, and the buyers immediately push right back with equal and even more strength than the sellers had. So in context now, this looks like the sellers are probably trapped. The sellers will likely have sold here, and if they didn't take their profit targets, now they're stuck. All in one candle, you're right back to their break-even point. And then it starts going against them, and it starts going against them a little more. And now they're starting to get really nervous and thinking, man, just get me out of break-even. I screwed up, I'm sorry, get me out of break-even. And notice where all of the wick starts coming in. We start getting the sellers who realize they were wrong getting out at break-even. The rest of them, they're going to have their stops above their entry candle, even above the high. And that's really where we're looking for a price to eventually get to. Now, it did look like the sellers had a good argument, considering that we had this nice grind higher and this massive bear candle down. But look where we stopped, right? We stopped dead on that gap once again, and that formed one of our favorite setups, the 141 spike, allowed a bounce right back up again for a gorgeous run to tap out those stops and get a pop through the highs to finish off the move. So just a gorgeous run and on kind of a funky day, right? Non-farm payrolls can be a little bit tricky, even on crude oil where it's not necessarily associated with it. It can still mess with price a little bit. If you're trading the currencies today, you know exactly what I'm talking about. So just a great combination of technical analysis along with market psychology and just putting a bigger picture and knowing what the traders are doing in this given situation. Buyers were stuck. They were given a chance to get out, which allowed a sell, but the sellers failed, and that allowed the buyers to sweep it right back up towards the highs. And we end up with pretty much just a range. So great day of trading. Hopefully you have a good weekend, and we will see you all on Monday.